Imagine waking up one morning to find that your savings have lost half their purchasing power. Sounds extreme? It's happened before. During the turbulent 1970s, the stock market stagnated, but if you owned gold, your wealth didn't just survive, it multiplied several-fold. Today, with global debt spiraling past a staggering $100 trillion and the world actively moving away from the dollar, the whispers on every investor's lips are getting louder. Is gold the only lifeboat left, and can it really hit $5,000? Before we look at the future of money, please note, the information in this video is for general information purposes only and does not constitute personal financial advice. I am not a financial advisor. Always consider your own financial circumstances and seek professional advice before making any investment decisions. History has a rhythm. The first gold bull run in the 1970s was driven by an oil shock and runaway inflation. The second, in the 2000s, was ignited by the housing crash and quantitative easing. Each time, when trust in paper currency cracked, gold soared. But why is the situation in 2026 so much more explosive than the 70s? To put it simply, we are in the 1970s on steroids. Back then, US debt to GDP was a manageable 35%. Today we have crashed through 124%. In the 70s, the world was coming off the gold standard. Today, the world is moving away from the dollar standard entirely. The money supply tells the real story. In 1970, the global money supply was less than $1 trillion. By early 2026, it has surged past $100 trillion. We have flooded the system with more currency in the last 5 years than in the previous 50 combined. When you combine this monetary tsunami with major regional wars and a global race for resources, you create a perfect storm that the 1970s investors couldn't even imagine. As legendary analyst Martin Armstrong warns, we are looking at a debt crisis that often precedes geopolitical conflict. He suggests that if Europe edges closer to a broader war, gold could easily soar to $10,000. But he isn't the only one making bold calls for 2026. Peter Schiff, who famously called the 2008 crisis, states that the dollar is finished as the world's reserve currency. He sees gold not just hitting $5,000, but easily climbing towards $7,000 in the near future. Jim Rickards, author of Currency Wars, goes even further. He says if the paper market for gold breaks, meaning everyone demands physical delivery instead of paper promises, we could see $10,000 gold before the end of 2026. And trend forecaster Gerald Celente agrees that the decline of the dollar is accelerating, pushing gold to unprecedented highs as a store of value. So, is $5,000 the peak? According to these analysts, $5,000 might just be the starting line. And here is where it gets interesting for investors. Historically, when gold moves, gold stocks, the companies that dig it out of the ground, move 2 to 3 times faster. With companies now holding cleaner balance sheets than in past decades, the upside potential could be explosive. We are living through a profound global monetary transition. While the idea of $5,000 or even $10,000 gold sounds like a windfall, it represents something more serious: the potential death of fiat currency as we know it, and a crisis of confidence in governments. Whether you are in North America, Europe, or Asia, the rules of wealth preservation are being rewritten. Remember, this video is for educational purposes only and does not constitute financial advice. Past performance does not guarantee future results. Always consult with a licensed financial advisor before buying or selling assets. For more in-depth analysis on gold, silver, and the top-ranked mining stocks poised to leverage this trend, check the link in the description below. Please like and subscribe for more global financial insights.